Good afternoon, everybody, and welcome back to another segment of the Daily Trade. Today is June 7th, 2017. So we're going to briefly go over what happened on Wednesday with the crude oil. So just a quick recap of yesterday. We had a rally, and eventually it closed pretty high into the day, and it tagged 48.40, and eventually you see this little sell-off right here. This was caused by the API. What is the API? The API is the American Petroleum Institute. They focus on seeing how much wells are dug up and if there is a build or is there a draw. And clearly they have speculated that there was a build in oil, and that's what caused this mass influx of selling. This is within 5 minutes, and it shot down pretty quick. It was about a roughly 50-60 cent to the downside, I believe 50. And it closed the day around this 48 handle. Market opened back up and did a little bit of channeling, some sideways action, but we don't trade those times. And as we progress into Wednesday, you can see that, so what's so great about Wednesday? Wednesday is, it's basically the news days for crude oil. It is the EIA. EIA is basically, there is this weekly petroleum status report, and what happens is the U.S. Energy Information Administration will come out with a number during the market session, which is at 7:30 Pacific Standard Time, and it tells us whether there's a build or whether there's a drawdown, and see how participants will affect the market. So that happens at 7:30 Pacific Standard Time, and I'll show you what happened up and right before until then. So here you go, up all the way up till 7. We had a little bit of a sell-off, a little bit bounce, test the 48.10, sold off, broke the 48 handle again, and price action went down to close to 47.50. So at 7:30, you'll be shocked at what happened, and boom, there it is. Within 5 minutes, we had a huge sell-off all the way from 47.62, broke that $50 level, and just screamed all the way down to 46.20 before having a little bit bounce. So what is this? This is basically telling you that there was a huge draw. A lot of people who were long probably covered their shorts or shorted a brand new position. There was also some people who were long and had their stop loss in place, but it did not fill them. I'm very sorry for something like that to happen, but it's best to not participate in the news because it's just a really bad habit to get into. I also have people speculate, say, I believe the news is going to cause the market to go down. I said, yeah, we can all feel a certain way, but it's not an ideal way to trade. Speculation is more like gambling. It's like, hey, I believe it's going to go down. It can clearly easily go back up as well. So this is something that's dangerous. You gotta carefully manage your risk and see how you want to trade. Eventually, it sold off a little bit more for me. I was hesitant on taking shorts at this point because it tested this 46 handle. It went down to 45.92, I believe, and went back up. I was hoping it to test the moving average on the higher side of 46.50 and continue its sell-off. I'd be more comfortable doing that. So let's take a look at what opportunity presented itself and what I should done and shouldn't have done. So this is what happened with the price complex, and I'm going to tag it back a little bit. There was actually a setup that was in place. Here's the high that it set up, and it wicked. You see up here, wick, and then here's the moving average. It's telling you that sellers are in control. But I was just looking for a little bit bounce. Hopefully I was gonna get filled, and right here, it would have been a stop loss for us at this 46.29 if we were to get in the trade. Here was the entry. 46.08 was a good price point entry, and the target was 46.84 was gonna be our target. How did I get that price target, you say? It's a little secret that later on I can teach and show you guys, but it's a very simple concept, but I won't get into too much details with that. I'm gonna fix this screen real fast so we're able to zoom back in, and let's go back and discuss this trade. So this is what happened. Stop loss 29.08, got in right here. It went down, tested this 46. It did not break it. I was very hesitant because this is an engulfing candle. This is a sign of reversal, so I was so hesitant. I just kind of got out at a break-even trade and says, you know what, maybe I should go look for a long. So even though if I'd been a little bit more patient, because it just maybe would have went like 6 ticks against me, which was $60 per contract, I could have just waited and been at a nice profit. This would have been a $210 loss for a $260 gain. Not bad, you know, for about an hour, roughly about an hour days of work. But that wasn't the case for me. I got out and I looked for another trade. And I shouldn't have been, but I was looking for something to the long side. I did see something and I did take this long right here at this 94. And my stop loss was here at this 76. Now do heed. For me, even though I took this trade, I was very cautious because I know I was against this trend, especially with this dynamic rotation zone in front of us, anywhere in between these two moving averages right here in this teal line and this orange line. It's a rotational zone. If this zone proves to show that there is a trend going on, it'll tag it, come back down, or even go in, rotate, and come back down. And we're going to move forward and see what happened. Price action went back up. My target was in the 12 area. And let me get a target right here, this 12. Hoping to get it. And let's see what happens with that price action. So the moment it broke this 46, I decided to move my stop to my break-even price. Why? Because I was being conservative. I was being more concerned that if it break lower, you know, I had myself protected. Was it going to break lower? I have no idea. Because this is trading. No one really knows what's going to happen. But we can anticipate. We can protect ourselves. We can do these little things to avoid losing money. So I moved it to my stop loss right there. It went all the way up to 46.11, and I believe I stepped away from the computer and I was taking my daughter to school, and I was also looking at my phone and said, oh, it went up to 46.11. Hopefully I get printed. And when I came back to my desk, I saw that I was not printed, and I was kind of upset, but I'm like, okay, fine. And eventually it stopped me out at break even, so I lost $0, which maybe probably equate to about $6 for fees and exchanges. So that was the trade for today that I took, and you shouldn't be looking for any more trades, to be honestly. At that point, this is called asymmetrical trading, as one of the trainers I worked with said to me. You're risking $0 to try to make $180, so there's no risk at all. So that was that with that trade, and throughout the day, eventually it did make new lows into the close of the day, and that is it for today. So I'm going to show you a condensed version of this trade that I took, and I eventually moved my stop loss, and it stopped me out at break even. And I hope you enjoy the rest of your day. Okay, take care now. Bye-bye.
I was leaking into darkness.